want to do a market update on what's happening in the used car market. Obviously, we're rolling into these fall months, which tend to slow down. So if you've been in business long enough, there's obvious, hey, it's a slowdown season. But I also want to show you kind of the impact of what it's compared to last year and so forth. And then I do want to show you how to find, what is slowing down your sale rate, what at risk do you have, what things are on your lot that you could focus on to keep the sale rate going to get a bounce back. And again, get that first 30 sale rate. Depreciating cars cause the gross profit margins to shrink. And so as you let age build up, you're going to cause yourself gross profit. And I caught myself there for a second to say, as your age builds up and you're selling more cars later in the cycle, if your average age of sale went from 28 days to 41 days, that's why your gross profits suffer. It's not because you cheap sold some fresh cars or you're losing gross because it's too competitive in the margin compression, which is true. But that just means as margin compression gets tighter, the sooner you need to sell those cars, okay? Regardless of the status of the car, if it's not getting leads, it's not getting activity, and there's other aspects of that car that's slowing it down, that's what I want to show you, because this market condition is just going to get worse over the next, or, stabilize, but it's not going to pick up anytime until tax season, unless there's some stimulus thing that comes out. Now, if you're listening to this on podcast, what I would like for you to do at some point in time, get on YouTube, my Facebook, LinkedIn, anywhere there's this video, because I'm going to show you some graphs right now. So I'm going to go ahead and start sharing my screen here in a second. And here we go. Now, what you're seeing in here is in our Lotwalk tool. Again, Lotwalk is, imagine real quick, you have a rapid recon or a recon velocity or iRecon or some kind of recon tool that tracks how fast you get a car from acquisition to online ready or on lot ready, from taking it to transportation to checking it in to parts and service and detail to photos. You check all those stops. But as soon as that car gets on that lot, the clock kind of stops, right? Well, Lotwalk, and again, that recon tool is kind of an extension of your inventory management tool, VinQ, vAuto, those things. And so let me share something just happened again. Let me go share my screen again. Let me do this, and let me share my screen. Okay, so, that recon tool is an extension of your inventory management tool and your DMS and stuff. And so that's what Lotwalk is. And it's an extension of your inventory tool and your leads. Again, that's kind of the clock. If you want your average age of sale to be 30 days or less, that's no different than wanting your turnaround time at 3 days or less or 5 days or less. You need to find those holes. So that's what we're doing in here. But some of the data we find, one is Google Trends. This is looking at used car market trends over the last 12 months. And I'm going to show you one that looks at it over an extended period of time. But, the peak of shopper index happened in July, even outpaced the March tax season, which was weird. But anyways, right now it's 68 out of 100. Okay. And so it's down over 30% since that July uptick. Now, also it's 75 this time last year. So it is down about 7% from this time last year. So there's less shoppers looking at cars. What does that mean? Well, if we're looking at used cars, we're looking at national used car listings. We track that year over year also. This time last year, 1.4 million cars on Auto Trader, 1.1, almost 1.2, 1.818 on cars.com. If you compare that right now, 1.54 and 1.24. So if you looked at cars 1.18, here we are looking at, again, another, 600,000 cars? So no, I'm sorry. That's just 100,000 cars. Less than 100,000. Looking at 60,000 more used cars. Sorry about that. But hey, you look at Auto Trader, 1.44. We're at 1.54. That's 100,000 more used cars listed on Auto Trader with a year over year 7% less shoppers. And if you look at last year's shopper index, again, it really doesn't take off until we go into that February, March tax season. So it kind of stays stagnant, really drags down through end of November. Okay. And then people maybe at the end of the year start sniffing around. With that too, new car listings are about the same, 2.1 and 1.7, and they're around close to 2.1 and close to 2.7, about 50,000 less new cars out there. So here's what I did want to show you too, though. If you look, as that shopper index, that's that red line I was just showing you up here, the shopper index has dropped off. So it's at the red line here. As the shopper index drops off, if you look at the green line, that's our dealers 2 weeks sold. So in that February, March uptick in shopper index and tax season, our dealers were selling over 50% of their inventory in 2 week windows. So that means they're selling 100% of their inventory in that tax season uptick. And now they're down to selling 40%. So right now, our average dealer is only selling 80% of their inventory because this market just started slowing down. And now all of a sudden, reality is kicking in. Our good dealers are disciplined enough to sell them fresh. So, as you're looking at this market data, if this is going to continue to stay low, the shopper index is going to continue to drop and stay low. With more cars available, you're going to find, again, the volume, the average age of cars are starting to peak back up. We've gone from a 34-day to 36 days of average retail days to turn. And you're going to see that continue to go up. If you go this time, let's look at last year. In October, it was at 43. And then by October 22nd, it was 57. And by January 1st, it was 55. So through that average age of turn, retail turn, this black line, cars are going to start aging on that retail list. What does that mean? Well, dealers will start dropping the price, and you're going to have to make these adjustments to go with it. Okay. So what adjustments do you make? What is slowing you down? How do you find what's slowing down your sale rate? And we've added this at-risk feature in here. If we're pulling your data, you can put your goals in and see what you want to sell each month in your inventory. I just pick a particular random dealer here. It's a smaller size dealer with about 50 cars on their lot. I could show you different, but their goal is to sell 60% of their inventory in a 2 week window. Okay. Now this particular dealer here, if I show you their trends, they pretty much, if you go back 47 units, they sold 25 in 2 weeks. So back in October 2nd, they were selling the beginning of the month. They're going to sell 50 with 47 in stock. And again, this can all happen. It's easy. It's even harder to see on cars on inventory that's, if you have 100, 200 cars, this is really going to be able to expose it. So we talked about not having any aged inventory because that's what's causing your gross profit to fail. And so that's what looking at these age buckets, again, if our goal is to have a 60% sale rate every 2 weeks, what's hitting the goal? And everything's in red here. And there's only one bucket that's really outselling that sales rate. And if you look, for the franchise, the products at this store is only selling at a 20% clip, where non-franchise cars are actually selling at a 42% sale rate. And this happens to be a Honda store. So what that would tell me is maybe we're too proud too long of our Hondas. Trades are selling at a 41% 2 week sold rate. And so again, that puts them on pace to sell about 82% of their trades in a month, but purchases are at 29%. And if you look at each one of these age buckets, let's look at 31 to 45. There's 11 units in that bucket, and they're what we call -7. That's how heavy they are in these. It's basically only on pace to sell 4 out of a bucket that has 11. Now, there's the reasons why cars aren't selling out of a bucket or any situation. A bucket, and what I mean by that, any situation, is they also have a problem with 20 to 25 grand cars. That's only at a 23% sale rate. Okay. They have a problem with intermediate SUVs. That's only at a 22% sale rate. Okay. And so when I talk about buckets, it's not just age bucket management, it's segment, it's years, it's price points, it's things like that can slow your sale rate down, purchases versus trade. But if you look at 31 to 45, these 11 units, there's reasons why they won't sell. One, maybe a high percentage of them, 82%, have no leads or no leads in the last 7 days. So maybe you have leads, but haven't had any in over a week, or they don't have any leads at all. No leads, no switches, meaning you have no leads and nobody in your database to switch them from one car to the other saying, hey, that Camry sold, would you be interested in this Accord? So there's 4 of those cars, 36% don't have any leads or switches. They're all photoed up, so it's not a photo problem. Could be a pricing problem. We predict where these cars would leave. That's a other conversation, but there's 2 cars that might be priced too high, and I could kind of show you what we mean by that. And a lot of times, purchases slow things down. Remember, the purchase is only at a 29% sale rate, and 7 out of these 11, or 64% of these cars, are purchase cars. And sometimes, again, non-franchise cars we're not familiar with sometimes sits. Well, this dealer's doing good with non-franchise are better, but 82% of these cars, or 9 of them, are non-franchise cars. So what's slowing this dealer sale rate down? I would say these 9 cars that haven't had a lead in 7 days. And I'm going to sort these by lead count. Look at all these cars with no leads on them. And I mentioned before, what about, maybe some of these might be priced too high or higher than a predictor. Here's a car that we have no leads on. We haven't adjusted in 7 days, which is fine. Predictor, we thought it would left at 95%, and they're still at 96%. So do we need to make an adjustment on this car? Well, if I click on it, I can see here that, sorry about that. We predict this car to leave at 27 days at 95%. Well, how did we get that number? Well, again, being a Honda store, have you sold any Subarus? Yeah, we sold one, and it left at 101% of market. So the last Subaru this dealer sold pretty well at 101%. But look, intermediate sport utilities, they've sold 18 of them, but they leave their lot at 93%. That's what intermediate SUVs sell at this dealer's lot. 2021s leave at 96%. Similar day supply, 95%. This car is mileage over 25,000 miles per year. It is a 2021 with 30,000 miles per year. Those mileage cars don't leave their lot till 92%, and these cheaper cars, 15 to 17.5, 92%. So based on similar cars leaving their lot, we would have thought 95%. So maybe because of the fact we have no leads on this car, that we should make an adjustment of this car. But also, if you look at some other indicators of what's slowing this dealership sale rate down, this car has a lot of red flags I see on this lot. Here's why. They're 8 units heavy in 2021s on this dealer lot. No different than looking at 31 to 45 bucket, but looking at 2021s, they're 8 units off pace. Segment, meaning intermediate SUVs, they're 5 units off pace there. This price point, cars in this price range aren't selling. They're a little bit off there. Makes, Subarus right now, they're 3 units off pace in Subarus. And again, it's in a bucket they're not selling enough out of. They haven't had a lead in 7 days. It's 30,000 miles per year. This car is not converting on Auto Trader. So basically what's slowing down this dealership sales rate is a high percentage of these cars in their 31 to 45 is not selling. And a lot of it's due to lead activity, and some of it has to do with the fact that they're higher than predictor, or a lot of them are non-franchise cars that they might not be familiar with that are sitting on their lot. So again, with this market and what's going on, it's going to slow down. You're going to have to stay ahead of this. One of the things I do want to show you again, I know I stopped the share screen, but I'm going to bring it back up again real quick, because the other things, just to look at, remember the purchases are offset. Well, if I look at purchases, notice that real quick. Total inventory, everything's moving pretty good, except and the 16 to 30, everything's underperforming except 16 to 30. When I go to purchases, flips around. Okay. Now all of a sudden, of those 11, 7 of these cars are purchases. And of those 7, 6 of them haven't had any leads in 7 days. Even if this bucket's moving well with purchases, there's 7 purchases in this bucket. And of those 7, 6 of them haven't had a lead in 7 days. So even though it's moving well, let's go look at these cars without activity, see if it's a pricing problem, see if it's an adjustment I need to make based on last price change. And again, dig deeper into your data. How does Camry sell off of my lot? The last Camry I sold 2 at 91%. Okay. Toyotas leave at 97, intermediate cars at 95. Is it a pricing problem on this car? And what other things does it have going against it? So anyways, as you go through, you can look at trades and how they sell, franchise versus non-franchise, and also all issues. And notice again, 20 to 25 grand is an issue on their lot. Let's attack that. But when it comes to purchases, it's the 17.5 to 20 grand cars. 7 of those, 6 of them without leads. And again, a lot of them are these cars that we've already talked about before. So that helps you really keep ahead of what's moving on, just at risk, a snapshot to stay ahead of this market. You can't be There's no way that information can't make you any better. So again, think of this lot walk tool as like a rapid recon or a iRecon or your reconditioning tool. Okay. It's an extension of how the things are moving on the lot, because the other thing that I didn't share with you, and again, I can go back real quick and do the share. But when we talk about all these issues, we also talk about lead management on these issues. So if I go look at any issue they have, remember, they weren't selling enough 31 to 45. Well, in a click of a button, here's your leads on 31 to 45. And have we had enough contact? Here's a 6-day-old lead we haven't called in 5 days, and we've only done 2 contact attempts. All right. Here's 11-day-old lead. We've done 6 contact text. So that's actually a good thing. So here's a way, 35-day lead we haven't contacted in 6 days. So not only can we isolate the problems you're having on the lot, but make sure it's not a people problem, it's a lead follow-up problem. So hope this market update was helpful. If you feel like we can help you stay ahead of this, give us a call or email. Go to lotwalk.com, submit a price evaluator on there, see what it costs to get things going. And I hope you have a strong finish to the second half of